What is up, team? Chuck, the Traders War Room, and I'm back at you with another video. This is your Sunday motivator, and I got a fantastic video with tons of stocks, tons of charts, and a lot of great information. But what I need you to do right now is hit that like, share, and subscribe button, and I need you guys to come along with me on a journey. Check the description tab out. Tons of tools and tidbits to make you a more successful trader right there at your fingertips, and everything products and service related with Traders War Room right there, guys. So check those links out and get spun up on some information. Now, if that sounds good and you're ready to rock it with me, then all I got to say to you is follow me and let's go to war together. Traders War Room, let's get it. All right, welcome back, team. Legal disclaimer, not financial advice. The content is for entertainment and education purposes only. You're responsible for every decision you make. We want you to have fun, use caution, and always go to war. Services we provide at Traders War Room, free and paid services. I say again, free and paid services, guys. Something for everybody. Real-time buy and sell alerts, live trading, bell to bell, every day the market's open, one-on-one mentoring, which has been taking off like wildfire. A lot of people are looking for that professional guidance and just mentorship, and we got you covered on that. And trading classes. We got a couple new classes coming up at the end of this month that I think will be fantastic for you guys. And don't forget about the fantastic community that we have at Traders War Room of like-minded investors. Truly a fantastic and just overall great experience, especially for you new traders, gaining that perspective and thought-provoking content from some of the pros and some of the more seasoned traders out there. Check us out, traderswarroom.com, and you've got the direct link right there below to the Discord. Last week's stats, we killed it last week, guys. Look at this, okay? We got tons of things going on. We had a total of 23 trades with 20 wins, 3 losses, 87% win percentage for the week. Our highest winner was the big boy, guys, a trade on SPY that netted us over 1,500% and over $1,300 per contract. Guys, that was a killer trade. They don't happen like that, but when they do, we take them, we ride those to the moon, guys. And our highest loss that we took last week was 100% loss on a lotto trade that we did on NEO with 88 bucks per contract. But guys, we made so much money on that SPY, the loss didn't even really count. And these are just my alerts, man. We have so much more going on, and we'll talk about those here in a moment. So checking alerts from this past week. Sorry, it says this week, but it's this past week we did, guys. We got MTA killing Tesla, 330 to 5. We got Microsoft getting hammered, of course. We got 160 to 187. We got a little scalp on some Tesla going on, 72 to 91. And we even got some sports betting, guys. The Warriors that were up for 135 plus points with 1.5 units. That one ended up going into the green. And the big boy, guys, I'm telling you, this SPY trade was fantastic. From cradle to the grave, we walked you through. We went from 85 per contract all the way up to 14, 15, and that created our overall net profit for that particular trade. Fantastic trade, and you guys only got it part of Traders War Room. And these are just a few. Remember, we got 25 plus real-time alerts going on every day the market's open. So We got all kinds of style stocks, option, crypto, forex, long, short, day, swing, spread, leaps, you name it. We got it. Something for everyone. That SPY trade that we did and we netted, guys, that was a swing trade. So it's not just about the day trading. We bought that on the 8th and we ended up selling that on the 10th, guys. So we do get these swings, and when we get them, we hit them hard, guys. So check us out today, traderswarroom.com, and there's the Discord link. That's where you can get all the alerts and everything pushed out. Something for everyone, something for every type of style, something for every budget. Come and get some, guys. We're killing it. Some exciting things that we got going on, promotions, classes, innovation. So right now we got the 5-day trial with the gold membership, guys. So come check us out. And listen, you come get the alerts, you activate it today. It's Sunday, you activate it, you get a week full of alerts. You like what you got, then you stay on with us for the entirety of your subscription, guys. You don't like it, you cancel it, and you still remain a free member and be part of the engaging community that we have, guys. It is a win-win situation. So we hope you take advantage of the 5-day trial that we have with the gold membership. We also got an upcoming class on 19 June, guys, how to trade the strat. Very popular concept right now going on, making people a lot of money. And we want you guys to make sure that you understand what the strat is, how to identify and use the trading bars, and how to take emotions out of the trading for greater consistent gains. So if this is something that you're interested in, definitely check us out. 19 June 22 at 12 p.m. Central Standard Time, $15, and you get to keep the recording. So even if you aren't able to make it to the live presentation, you buy it, you register, everything's good to go. We'll make sure you get your recorded video into your mailbox. And it'll be on the website starting tomorrow. We're going to start promoting it tomorrow. It'll be there for purchase and registration on the website. Next class, how to use margin for consistent income. Guys, this is a very important class because a lot of people I talk to, and I do one-on-one mentoring, and also just little DMs and stuff, they're not utilizing their margin properly and they're losing money, and big money at that, guys. And we want to help you guys utilize your margin properly so that you guys can make consistent income. So 26 June, 1 p.m. Central Standard Time, $15, standard price. Obviously, you keep the recording because that's how we roll, but we're going to teach you what margin is, how to effectively use it to leverage your trades, and how to use it to generate consistent income. And again, every battle needs a plan. We want you to build yours with Traders War Room, and this will be on the website again starting Monday as well. So definitely check out the website and see what we got popping off. Now, this one's important because this has been taking off like a storm, guys. The instant messaging alerts. A lot of people are getting overwhelmed with all the dings, pings, and whatever on all the platforms that they're using. We simplified it. We made one easy platform that's just less noise, just alerts, and it's going into your phone just like a text message, guys. So come check it out. The website, you can find all the information out, but you can also go right there to the IM Direct Access link and get spun up on this, guys. This is crazy. And peeps are overwhelmed with all those dings and pings, and they're loving the simplicity of this. So definitely come check us out if this interests you. And the link will be in the description. So all you got to do is click that hyperlink, and we got you covered. The bottom line, we're destroying the market no matter which direction it goes. We want you to quit wasting that money that doesn't make money. We want you to invest in yourself in 2022. We hope you bring Traders War Room along for the ride. And with that said, are you ready for war? Traders War Room is. Join us today, and let's get it. Here we go. So market close. This was Friday. So market, here's how market closed on Friday. Right across the board, you can see that's big time droppage. Okay, huge sell-off going on. And we started seeing some bond and CD yields also poking up as well. Here's our futures. These were live as of today and definitely red across the board. Remember, futures are a glimpse into what could be, not what will be, and we use them just to get a plan and a strategy in motion so we can attack the market come the bell. And here's your top trending stocks, guys. You're seeing a lot of crypto there, but there's some names in there, some important names, and we're going to cover some of those in the stock section, in the chart section. Here we go. Total market image, red across the board. You see some pockets of green, but pretty much for the most part, it was a bloody mess. Your ETFs, the only thing really making green was those inverse ETFs. Here's how your sector performance, consumer discretionary and technology, definitely just getting killed. Consumer staples and utilities didn't fare so well, but they were still red at the day. And here's our big money calls versus puts. A lot of money going in the SPY, kind of 50-50. Tesla looking pretty green. QQQ looking a little bearish, so definitely paying attention to that. Amazon some green, Apple, and just the big boys. Guys, why do we look at this? Because we're looking where the big money goes, okay? That's what's going to drive needles. That's what's going to drive the sentiment, and that's how we as retail investors make money off of the movements inside of the stock market. You follow the big money because the big money has the power to influence the market, okay? Hot stocks and sectors. Here we go. Penny stocks. If you guys aren't paying attention to the penny stocks, you are crazy, okay? Paying attention to these penny stocks because they are taking off. I saw multiple penny stocks that went from $1 to $5 last week, okay? And that's money, all right? You buy 100 shares at $100, and then this thing takes off to $5. Guys, that's money every day. And I don't know who wouldn't want to get on that train, guys. These are cheap. Check them out because a lot of these are making big moves. Here we go. Best performing industry for the 5 days, academics and educational services. So we haven't seen this for a while, and it barely was performing, okay, 2.34%. And here's some of the stocks that are on that, okay. Some of the big ones that really pay attention is REDU and EDU and WAFU, but a lot of these are some of these Chinese names, okay? So if Chinese stocks are struggling, you can rest assured that these are going to be the first ones to go away, okay? So definitely paying attention to these because this was the best performing industry over the 5 days. And some of these that maybe hit really hard, like REDU hitting 138%, might be looking for a cool down period because it hit so hard going into last week. Top stories: Asian stocks slump amid risks of U.S. CPI, China COVID struggle. So Asian stocks sank on Monday and bond yields ticker higher as red hot U.S. inflation reignited worries about even more aggressive Federal Reserve policy tightening and COVID-19 warning from Beijing added concerns about the global growth. So I want to give you guys some of the stocks. So this ETF here, KWEB, it's China ETF that you're able to trade on the NASDAQ, I believe. And these are the top 10 holdings of that particular Chinese stocks. Definitely paying attention to this ETF and these underlying stocks would be a good idea. Another top story, EV maker Electric Last Mile Solutions files for bankruptcy. Now, this is interesting because sometimes these smaller companies, when they file for bankruptcy, while it's a bad move for the company, it's kind of showing struggles and stuff like this. Bankruptcy sometimes is a tool that companies use to help associate and get things underneath their sales. And you can kind of see some pushes on the underlying stocks when the bankruptcy happens. So definitely keep ELMS on your radar and pay attention to see how that operates going into this week. Next story, pension investors launch campaign against dual class share structures. So in London, leading UK and US pension investors managing more than $1 trillion have launched a campaign to stop companies using dual class share structures that concentrate voting power in the hands of certain shareholders at the expense of others. So this is definitely some interesting news dealing with pensions. But I want you guys to understand this. So people are feeling the crunch. This is feeling the crunch. Okay, when things are good, you're not worried about this type of stuff, all right? Things are not good, and people's pensions are suffering, and people's retirements and stuff like that are suffering. So everyone's looking for loopholes and inches and just a way to keep some sort of maintain of some normalcy on their particular investments. Definitely paying attention to that. So that's it for the news. Let's go ahead and get in some charts. What looks good moving forward? So here we go. Here we have the earnings, most anticipated earnings. This week is not a good week for earnings. We don't really have hardly anything. We do got a couple names we recognize: Oracle, Kroger, Adobe, and a few other ones. And we'll check out those charts. But basically, this will be a low week for earnings. But we're looking forward to a couple weeks where we're going to start getting back into that big time earnings season. So we're paying attention to it. First up, ETF check. So let's look at the SPY. Okay, knee-jerk reaction. I'm thinking the SPY wants to push and test the area of 392 and go up towards the bottom of the gap. All right. Now this might be a crazy stance for some people because they're like, how could you think that there might be bullish move? Listen, even in a bear market, there's going to be relief days. Now, do I think we still have some downside? Absolutely. But I think we see the relief and at least a test up towards the bottom part of the gap before we end up coming back down and testing those lower levels. Okay, so I am bullish on SPY, just at least, Monday, Tuesday push, probably going in Wednesday, since there's some government meetings coming on in the midweek and at the end of the week. probably will see some bear movement, but I do think we get some relief from the knee jerk and big time selling that we had on Friday and Thursday. Next up, USO, I'm thinking a cool down and continuation towards 88 to test the 21 moving average. This is just in my opinion, you guys, you know, this is an oil stock. It's an oil ETF. Oil has been killing it. As you can see, the price on the pumps are reflecting that oil just continues to go up. But I do think we see a little bit of a cool down. And I think based off of this chart, we're going to go down and probably try to test that 21 moving average. And before we'll see an eventual spike back up to go test those high levels. And finally, on the ETFs, XLI, this absolutely was destroyed last week. Now I'm looking for a relief push towards 92. I think it's due. This was just demolished, guys. And I just think that we're going to see a little bit of relief coming into the beginning parts of this week. And I think this is one of the ETFs that'll see that, and their underlying stocks will see it as well. This is a consumer discretionary particular stock, and they absolutely got hammered. So we'll watch this and see how this pans out. All right, next thing, let's get into the actual stocks, guys. Oracle, okay. I think the earnings will surprise some people, and I like this for a push up towards $69 and beyond. So, you know, they weren't immune to the drop and the sell-off, but I think their earnings are going to push them up. They've always had pretty decent earnings. They've always been followed by a continuation to the upside. I think this may end up dipping, but I think we're probably at the bottom where people are starting to think enough's enough with Oracle, and they'll probably start to get in, and I can see this pushing towards 69 and hopefully breaking 70. So I'm definitely looking at this one, and this is on my radar for a bull call. Kroger held up pretty nice concerning all of the selling that was going on, and I like this for a push towards 53 going into earnings. A little suspect for holding anything through earnings right now, but I think if you were to go out far enough, you know, 2 to 4 weeks with Kroger and buy as close to at the money, in the money as much as possible, I think you can wade some storms out and potentially leave a little bit of dry powder to average down just in case. I think you'd be pretty good and make some decent money on a pushing out Kroger call. And Joe, not sure on this stock. This is the first time I've ever looked at it, but based off the indicators, it's bearish. However, it's trending. It got a lot of volume, and I'm thinking we potentially could see the downside. All the indicators are pointing down. MACD cross, RSI down, SMI down. So I think that we got some continuation to the downside, and I think 43.50 sounds about right for this particular stock. Apple, I'm liking this for a push up, has great news about future projects, and you just can't cap Apple out. Apple was part of the knee-jerk reaction that was happening. I do think we get a push here. I think we push back up towards those 140 areas, and we'll probably start to clear that gap that we have. You know, Apple's one of those that doesn't like to stay down long, and when it gets some wind underneath its sails, it just likes to soar. So I do think we push up sooner than later. Even though the indicators are going against what I'm saying right now, you know, you got the cross on the downside of MACD, RSI pushing, and the SMI. This usually likes to go against the grain, and I like this for at least a little relief pushing up before we eventually, potentially, will see the downward fall if the market cannot hold. Adobe, I'm thinking this continues down with periods of relief. So I think this is overpriced. When you see a stock like this, even though it might be worth this and you know it's whatever, you see a stock that's like $400 and stuff right now, and it's a tech software type of stock. I think people are thinking it's overinflated, and they're rightfully so. You know, probably fundamentally you're looking at this like they're solid and everything, but fundamentals will probably tell you that this stock is more fair valued around 300, maybe even 325. So being up closer to the $400 area, we have some room to go to the downside, and I think we do that. I think 368 sounds about fair right now before we start to see some relief and you know, in rejection to those lower levels. AMD, I believe this will have some more downside with the relief days. Again, you're starting to see that trend, guys. Downside with relief days, okay? We're in a bear market, and we're going to have relief days where things are booming up. But ultimately, I think some of these stocks are going to continue down. That news with NEO saying, hey, quit putting our names in your stock, you know, marketing and advertising because we don't got a deal. I think that hurt AMD. And then these are some other chip makers that are out here that are coming out saying that they got a fantastic chip that will just dwarf anything else out there on the market. So I think AMD sees a little bit of downside. However, once we start pushing into those 80s, AMD loves to get rallies. So paying attention to that, I think we might see a big downward spike at some point this week. And that would be a good time to probably look for that reversal to the upside short term. But I do think we continue to the downside here eventually and testing those $85 areas. MSTR chart looks bearish, thinking down pressure towards 200. And, you know, we're looking at the chart. We got areas where we've hit, you know, 129 and stuff. And it's been consolidating a little bit, but we're still trending downward below our moving averages we use for momentum. And I like this for continuation to downside. We got the SMI that crossed already. The MACD hasn't crossed yet, but typically the SMI crosses before the MACD and gives you kind of a precursor, and the RSI is pushing to the downside. So I do think that this trends down below 200, and I think this is good to go for puts. Guys, I wanted to do a new sectum, so I'm starting it out today. Pro perspective, okay? I had a question. My boy T-Law hit me up, and he was talking about earnings, and he wanted to basically, the topic was around how to trade earning plays. And so I wanted to create a pro perspective type of segment into my bigger YouTube videos. And so we're going to go ahead and talk about it real quick. So this is just from me, and this is just my opinion on certain things, but pro perspective on earnings. Okay, they're risky due to volatility, all right? Usually trending and popular stocks will see run up going into earnings. We see that all the time. Tech and speculative stocks are very risky holding through earnings currently, this current market. These tech and speculative stocks are holding up. And the reason why is because most of these stocks have traded with huge forward PEs with bear sentiment causing selling, as these are overinflated and fundamental underlying. Now, we talked about that with Adobe, right? Where the fundamentals are saying Adobe might be closer to 300, maybe 350, but it's trading at 400. It has maybe a $50 to $75 move to the downside before it's considered to be fair value. That's just examples of what I'm talking about with these particular trading with these huge forward PEs. And these stocks will see relief during the market because they're popular and they're trending, and they'll come down and people buy in and try to make money off them. But the sentiment, the way it is, the long investors with the big money just aren't there on these speculative and overinflated stocks. They're not there, okay? They're shorting the stocks and they're waiting for these to come back down to fair value so they can buy in and go deep. Now, that's just my pro perspective on earnings type of trades. Take it for what you will, but this is something I've noticed, and I play a lot of earnings trades, and these are things I look into when I'm getting into the earnings trades, as well as TA and some other stuff. Now, that's it, team. Remember, we want you to invest in yourself in 2022. We hope you do that with Traders War Room, and always quit wasting money that doesn't make money, guys. If you want to spend some money and that will truly make money, at least come over to the free side of Traders War Room and check us out, guys, because we got the check on alerts and we're keeping things above board, guys. We're making money. Do we take L's? Absolutely, man. Any pro trader that tells you they're not taking losses is a liar, okay? But as long as your wins outweigh your losses and your net positive at the end of the week, that is the goal, to be consistently profitable. And that's what we're trying to teach people and also show over at Traders War Room. You can make money in any market and you can make money from anywhere. So that said, thank you. Always, we want you to go to war. Remember, we look at the stock market like a war zone at Traders War Room. Stocks and sectors, those are our battles, and we do it together as a team. More now than ever, we are at war with the stock market, and you need a team to go to war with. And if you like what you're hearing here and you're ready to rock it with us, then Traders War Room wants you on the team. And all I got to say to you is follow me. Let's go to war together. Traders War Room, baby. Let's get it. And you have a great day. Check us out.